Hello, it is the 27th of March 2011. Welcome to the Silver Log and some silver and gold analysis. It will be a fairly quick little video, but before we begin, a little word jumble, which will be answered tomorrow. This is for the clue, another way of saying articles wanted in the classifieds. Good luck, and I'll reveal the answer on Monday. Let's get started now within this hourly chart. And I've been stating here within this 1 day and this 5 day moving average. It's a battle between the two of them. It looked like it was trying to get above it in here on the Friday session. That did not happen. Markets came back down to pretty close or right at its previous low from the day before, and it ended the day with a little bit of a rally coming back to this newly declining but still more neutral 1 day moving average. The 5 day moving average is rising. This will be the first test of the 5 day moving average since it started to turn over, because we've seen it become resistance in here, break away from it, and now the next time it does test it, it should be successful. And I say should be as in greater than 50%. Probably not much higher than 50%. Still, regardless, whenever you have a rising 5 day moving average, especially with how bullish we've been for a while, the benefit of the doubt would be towards the upside. As far as a significant trend line is concerned, this one was violated at the end of the session, and what this means to me is this could be we could correct through time a little bit more and maybe even have a test towards this 5 day moving average as a possibility. And if it does recapture this, watch out, 40 would be coming fast, because this would be one heck of a bear trap going below this trend line as much as it does. But we'll wait and see. I wouldn't be expecting a major fast move to start the week, but at the same point, I know at some point the wild moves are going to happen. It's just I don't expect them to happen like today, tomorrow. At some point, I do. As far as the daily chart is concerned, since this run up from the 26 low within here, it's been very nice as far as how the charts are playing out. We had a nice little run up with some consolidation in here, another consolidating pattern here, another consolidating pattern here, and maybe we need to have yet another one. We've had two small candles that have consolidated, and even a move down towards the 35.5 level to make a higher low above this 33.90 or so. Roughly around 35 would be a nice place as a possibility to stick in another higher low. Finally, we're going to take a look at the gold chart. This is the daily time frame. It made new nominal highs barely on the Thursday session. And within this, we can make account for this low and this low. Therefore, as long as we can stay above the 1380 mark, then it will continue the trend of making higher lows. It's not up that much if you consider the distance from here to here. However, if it does manage to find a Fibonacci support level, maybe come back down and then come back up towards this 1435 to 1440 area, I would really like the chances that it would be breaking above it and then testing the areas of around 1480. And if it is not able to keep the pattern, well, for a trend line or the new trend line analysis that I think will be pretty important will be this one in here. This is the significant trend line. So if we say match in here, this could be a spot where you not only make a higher low, but maybe you find this trend line hit, break of this trend line. Then I'll be looking for a possibility of a move down towards the previous resistance here, roughly around 1370, which would also be approximate to a key Fibonacci level from the February lows and the most recent highs. Thank you for watching and have yourself a great day.